Hey,
Hey,
Sherry, how are you?
hey, Tracy, I'm doing well. How are you?
Good. You're out in
Good,
College
good.
Station, Texas. How is it going out there?
Yeah, it's great here. It's cold and rainy though right now. Mark is picking up for spring and doing really well. But I wanted to have you on today to talk about some alternative loan ideas, maybe, because there are
Yeah.
other people who are self-employed like me who maybe it's difficult to get a mortgage loan to buy a house if you're self-employed and doing your taxes that way. Um, and I know that you have a couple different options. So if you wouldn't mind go over some of those for us.
Yeah, that would be great. And so I always try to, when someone is self-employed, I'll always try and look at their taxes first, just because sometimes there's things that we could add back in, like depreciation or depletion, or maybe they pay themselves a salary and we could use their K-1 and wages. But if that doesn't work, then we just get rid of that and then we try something different. So bank statement loans are my first go-to for someone that's self-employed, because you could do either personal statements or business statements, sometimes a combination of both. And you only, in some programs, need a minimum of 3 months, or you can go up to 24 months of statements. And the more statements you provide, the better interest rate you get. So what they'll do is, depending on the lender that we work with, they'll take your deposits that go into your account, which ends up being your gross income, right? Which is always higher than what your tax returns will show. And then they sometimes could take 50% of those deposits and divide that by 12 and use that as your qualifying income to buy a home. So that's always the first way that I look.
Yeah.
If we
Quick
can't,
question, Well,
go ahead,
quick
please.
question. So what kind of business structure is best for getting a loan? You mentioned different business structures, maybe like an S corp versus sole proprietor versus corporation versus LLC. Which one?
Yeah. So
which
when
is
you
the worst for getting a loan and which is better?
So honestly, being self-employed, you're taking advantage of, no matter which way you're filing your taxes, of writing things off, right? So when you're a sole proprietor and you're filing a Schedule C, we'll take that bottom line income, like I think it's line 31, or it was, and then we'll add some things back. Again, that's just you, that's your individual business, that's your income, right? A corporation, it's a little bit better because generally you could pay yourself a salary, right? So you could pay an officer salary. So we could use those wages if you could document consistency, and then we could use the net income from the business or the K-1. And that doesn't matter if it's an S corp or a C corp or whatever it is. So what you don't want to do is be like, oh, hey, I want to buy a house next month, and then start paying yourself a salary. Like the underwriter knows, it's not consistent based on what your prior year's taxes are. What I also have done for people is, if, for example, you're ready to file your taxes this year and you haven't yet, let me take a look at last year's taxes and get an idea of how much income you might need to claim in order to qualify, right? Just to see if that's something that's even feasible for you as a business owner before you actually file, because you may be writing things off just to write them off, but generally speaking, if you didn't have to have those write-offs, it could help you, right?
Right.
So just any type of business owner, generally, it's going to be really difficult. And that's why there are these alternative programs. They're called non-QM loans or non-qualified mortgages. If you hear that term, interest rates are always going to be higher, right? I tell people, and I went to the bank statement loan next, because generally that's a little bit better of an interest rate than another program, which is a no income, no ratio loan. So that is something where we don't list a job on the 1003 application. We don't list income. There's no debt to income ratio. You could actually purchase a home and you have to have 20% down in most cases. And then you have to have at least 6 months of reserves. And you know what reserves are, right?
Yes, but why don't you explain them, because people watching might not understand.
Yeah. Okay. So when we talk about reserves, for example, it's money that you have in an account, whether it be checking or savings or 401k, and you're not going to use those funds for the purchase, but the lender, the investor, knows that you have that money to access in case something goes wrong with your business, right?
That would be usually like 3 to 6 months worth of your average monthly expenses saved in that reserve account.
It's actually 6 months of your PITI. So your total mortgage payment that you'll have on the new property, they'll consider that as reserves. If you own additional properties, they'll also want reserves for those additional properties that you might have loans on. And again, you could use check. It doesn't have to be liquid money. You're not going to spend that money. It's just to document that you have access to it in case you have trouble with your business. So, so that no income, no ratio is a great loan. People can even do a cash out refinance. Actually, they can't in Texas. I take it back. I've tried. So, you cannot do a cash out refinance, no income, no ratio in Texas. So, but purchasing, yes, you absolutely can. I would say another option for investors. Do you have a lot of investors out there buying property right now?
We do. We have a lot of rental property here.
Okay. So if you like when you buy a rental property traditionally or through a conventional loan, we can generally take whatever the projected gross income is and take 75% of that to help offset the payment. But if you're still having trouble proving your income, you could still buy an investment property, non-QM, right, non-qualified, which is what's called a DSCR loan. Have you heard of that program, Sherry, at all? DSCR?
I recognize those letters, but I couldn't explain. Yeah.
Yeah, so that's why I'm here. So DSCR stands for debt service coverage ratio. So what happens is instead of someone qualifying on their income, we're qualifying them on what the property is going to rent for. Okay. So if it has a tenant in there, we'll use what those rents are currently, or when we get an appraisal, it'll say a projected rent on the appraisal, and you use that projected rent and the new mortgage payment, and you want it to be at least a 1-to-1 ratio. So if your mortgage payment is $2,000, you want to have it rented for $2,000. Now, if it's higher, you get a better interest rate on the product. If it's lower, they start changing how much of a down payment that you need to make, right? Because they're only using that as the ratio of you qualifying. They're not documenting your income, and they're not documenting a debt to income ratio.
Just based on the merits of the property and the income it can make.
Absolutely. And you don't have to be a first-time investor, but generally, if you don't have any history of owning a home or being an investor, instead of 20% down, they usually back it to about 30% down, like a 70% loan to value. So you really just, again, need to talk to, go through Sherry and then talk with me so I can get a really good, clear picture of your situation. And I have access to over 190 different lending partners that we work with through Nexa Mortgage, which is one of the advantages of working with me is if there's a loan out there, I could find it. We even have someone for mobile homes, which I didn't even know until recently.
That is awesome because we do have some of those here.
Yeah, you can't find anybody that does mobile. And so, they were like, yeah, there's a team that I can hand it off to, but they just focus on mobile homes, which is awesome. So I have an outlet. Same for land, like we talked about. I think where you are, there's some land property, right?
Mm-hmm. Yeah.
Yeah. So, so if people want to purchase land or if they want to buy land and then build on the home, right, do the construction, we can do a loan that will help you purchase the land and do the construction and be the end loan that you get. So you have to refinance, right, after the home's built. You don't have to in this case. It's like just basically one loan that does every piece of it for you. And I think for the land could go up to $250,000 that you buy it for, and then you could do the construction on that. And then we do the final mortgage product at the same time.
What's the money down on land?
Oh, that's a really good question. I can't tell you off the top of my head.
I think it's usually it's higher, 25 or
yeah. I mean, honestly though, they're using the projected value of the home built also.
Okay.
Right. So
yeah, I'm thinking of just lands. Yeah.
Yeah. If you do just land, absolutely. So it's a higher down payment if you're just buying the land, but if you're doing it to where you're buying it to put a home on it, I don't think it's as high because they're using the projected value of what it will be once it's all complete.
Okay. Okay. Another question popped into my mind. I have some people right now that have, they're out of state. I want to say Montana. I'm not sure though. But say they have one home there and they want to have another one here. Like there's like snowbirds, say, or New York and Florida, that kind of thing. Is the second home, would that be like a commercial loan, like an investment loan, or would that be a regular conventional loan for a second home?
Yeah. So we always want to try to go conventional second home first. As long as it's greater than 50 miles away from your primary residence, it will be considered a second home. The down payment is 10% minimum, which is great. So you don't have to put 20% down. We'll look at that option. And then in that option, you have to qualify for your existing mortgage and on the new mortgage with your income, right? So if you don't qualify for that, generally then what we'll do is we'll have to look at it as an investment property, because you'll want to use, again, that even though you're going to be occupying it however many times during the year, right? If you buy it as an investment property, you actually get credit of what you could rent it out for, because you're putting more of a down payment. So instead of 10% down, investment properties, the minimum is 20% down. Yes. And then, so I only do it if you can't afford in your debt to income ratio, both properties, both payments in there. So then we would flip it to an investment purchase, but absolutely that's possible.
Okay, great.
Yeah.
No,
I wanted to tell you too, because you asked about people that are self-employed. So it's interesting because I didn't have this as an option with my other company, but we also work with a lending company that actually can do loans based on a business's receivables, right? So it has nothing to do with their home, but if they are, and we have some businesses that are approved or not approved on this one particular lender. And if it's a not approved list, then we could go to someone else. But it basically, you're documenting the receivables that you're getting for your company, and they lend a percentage of that. And it's sort of like a line of credit, right? Where you can access that money. And if you're going to use it to purchase a home, invest in something, that's an option also. So it's not like a traditional mortgage product, but they brought it up to us as an option for people that are also self-employed.
Yeah, that's awesome, because receivable is to be something you've already earned, just waiting to get paid, right?
Exactly.
Awesome.
Yeah. Yeah. So there are, I mean, there's so many products out there. I'm just trying to think of some of the other things. I mean, we have ITIN loans, you know, DACA, definitely like the investment purchase options. I don't know if it's big out there by you, but I'm in California, and there's actually a 420 loan. If you have experience in the 420 world, you could buy land. And so there's a loan program for that, which, you know, I don't know. I've been in this for 25 years. So it's just so funny that now we could lend for someone to grow 420 stuff on the land. So yeah.
Well, I think that I know a couple of people that the ITIN loan would apply to. So that's awesome. And that can go in Texas, right?
Yeah. And it's actually, it's going to require a little bit more of a down payment, but that's when someone doesn't have a social, they just have an ITIN number. And if they're primarily Spanish speaking, I mean, they may not be, but I have a loan officer on my team that actually could speak Spanish to them. We have Spanish speaking processors. And then we also have loan officers throughout the country where if I'm not personally licensed in that state, I can refer the transaction to them. And they also can speak other languages as well. So I had a realtor yesterday that can work with a client face-to-face in Vietnamese, right? Because they could understand, but there's a little bit of a barrier. But to take them through the entire process might be difficult. So we have loan officers that could speak multiple languages within our company that we could access, which is pretty cool.
That is awesome. We have a world-class university right here in our backyard. So that would come in handy. Yeah.
Wait, I'll get you some specific information about the ITIN and like down payments and things like that. So, you know, we could share that. Yeah.
Maybe do a quick, you know, shorter call on that specifically, or, you know, can pick apart some things and go deep instead of wide.
Absolutely. And I think, you know, we talked about this, you know, earlier. Texas is it's a different state when it comes to mortgage lending. And so I want to be really careful of what I say we can and can't do, right? I don't want to get us put in a position where people get excited. So what I'm going to try to do for you is I'll get like Texas and then like specific programs, right, that are really meant for that state, or things that we can't do, just so you have a guide. And if you come across a buyer, you just know pretty quickly. So we're not, again, like, you know, making them think that we can help them, and then it turns out that we can't. So
yeah, it'd be great to have something like that to let people know that it's not just FHA and conventional, you know, or commercial. There are some other options out there. It's just, how creative is your lender allowed to be?
Absolutely. And you know, yesterday with the Federal Reserve meeting, and there were rates improved, right? So the government increased 25 basis points, the federal funds rate. Our interest rates went down. So we are actually, I mean, I I locked a government loan, an FHA loan yesterday, in the low fives. So, on government deals, we're back to that. Conventional files, we're seeing like the low sixes now, where we were in the low to mid sevens, just like a month or two ago. So, do you get people always asking you if it's a good time to buy? Is that like the question of the?
Always. How's the market? Is it a good time to sell? Is it a good time to buy? Yeah.
What do you say to that? I'm curious, because I've heard so many different responses from agents.
Well, I think, if you need to move or have a strong desire to move, just move. It's the time. That's the time that's right for you.
Mhm.
Interest rates go up and down, and you can always, keep your credit, keep your credit sharp. You can
Mhm.
always refinance later.
Mhm.
I don't want to say, what date the rate from married, what was it? Date the rate and marry the house or something like that.
Exactly.
But yeah, I mean, that's the caveat is you have to keep your credit clean. You have to keep the income and be able to prove, qualify for a loan if you're going to refinance
Mhm.
later on. But, over history, rates would go up and down. That's just part of the economy. The whole economy goes up and down. Breathe this in and out,
Yeah. Yeah. And the same thing to me, it's like, I've had calls with, people as young as 22, 23 years old that are EMTs or firefighters and, have gotten into good paying jobs that they can project a salary increase. And owning a home builds wealth, especially when you're younger, and you could get a gift from your parents for the full down payment. You could put as little as 3% down as a first time home buyer. So that's what I tell people, like, you don't know until you know. And one of the cool things that I wanted to share with you is we can actually do a soft credit pull. So we now can look at someone's credit without it being an inquiry on their credit report, without affecting their score. And I'll be able to see all three trade lines, all three credit bureaus, and all of their debts. So we could do a true pre-approval on someone without even a hard pull on their credit. Because a lot of times people say, I'm not ready. I don't want you to pull my credit. I don't want my score to go down. Now you don't have to worry about that, which is good too.
Okay. So is there a difference in the pre-approval you're talking about? Or I guess if you do like desktop underwriting, would that be a hard pull then if it moves to that?
No,
state?
we're able to use the soft pull to still run desktop underwriting through one of the lenders that I work with.
Okay, that's great. And
And
the benefit of
yeah,
the benefit of desktop underwriting is that you're already approved. You don't have to have that what's the word? Contingency on your contract for your sellers. So that would put you at an advantage being a buyer.
And I always tell people, so if I pull your credit today and it's a soft pull, okay, if I pull your credit a week from now and it's a hard pull, that information should remain the same. But if you all of a sudden miss a credit card payment, or you open a new debt, or you try to shop for a car and they pull your credit 10 times, that could change it, right? So I always tell people, if you're within 30 days of wanting to buy, hey there, is that your puppy?
That's my dog. Yeah, the mail went by.
So cute. He was agreeing with me. So if you're within 30 days of buying, a hard pull is worth it, because then that credit report's good. But if you're just a couple of months out and you're just trying to figure it out, then a soft pull is good, but you have to remember to keep your credit in check, like you were talking about.
Okay, so and then on credit, you don't want to open any new, you don't want to charge up a bunch of stuff. But I think also you don't want to pay everything off and close out accounts, right? You want to keep them at 30% of use. If you have 3 credit cards, don't have one that's all charged and the other empty.
Correct. Yeah.
Spread
So
that
we actually, when we review someone's credit, it actually will show us all 3 credit scores, and then it will have a plus with a number under each one. And if we have that, then we could actually do what's called a Wayfinder report, and it will tell us based on that bureau, if we wanted to help them increase their score 20 points, it'll give us suggestions of what they need to do. A lot of times people think paying something off helps. And maybe that's not the case. It could be paying it down by $200. It could be coming off an authorized user account. It could be paying off a $200 collection that you have. You don't know. And so we'll run that simulator for them. And it's not like a guarantee, but at least we could point them in the right direction of how to improve their credit if they need it.
Right. So it's always a good idea to pull your credit report every couple of years just to make sure there's no fraud, or there's no mistakes in there, or there's no collections or something that you have no idea about. But before you go making huge changes, if you're thinking about buying a house or, financing something large, cars these days, I would think are close to the same. They're getting up in the dollar amounts.
Yep.
talk to a lender before you go and make a bunch of changes to get a strategy that will benefit you the most.
Absolutely. So ideally it would be reaching out to Sherry, right? If you're thinking about buying, she's obviously like direct in your market, right? She knows
Mhm.
the pulse of your market. So when you reach out to her, she's going to kind of gauge an idea. And I'm not just trying to speak for you, but of kind of what you're looking for, you know, what your timelines are. And then usually she'll just be like, okay, you got to talk to Tracie, right? You got to talk to a lender, just because you don't want to disappoint someone either and take them out looking for homes, right? If they're not truly pre-approved generally, right? And then the seller, they want to know that you have a letter from a lender, correct?
Right. Yeah, especially in markets like this, you know, that just culls a bunch of not serious buyers if they're not pre-approved already. So
Exactly. And you know, it's pretty easy. I tell people just the process really quick is we'll have a conversation on the phone. I'll kind of understand, you know, what do you want your maximum payments to be? Because even though on paper you could afford $4,000 a month, your budget may only have you affording $3,000 a month, right? So that's a question I ask. I also will ask, how much total money do you have to buy the house? So I say total because you're going to have a down payment and you will also have closing costs. And it's important to know that amount at the very beginning so you can have proper expectations than having a surprise at the end, right?
and besides the closing costs, you're going to have moving expense. The moving truck and the people are expensive. You may have to buy furniture, appliances. You're going to have to put deposits down for utilities and things like that. And maybe depending on the neighborhood you move in, you may have HOA fees to start paying right away.
Yep.
So you want to be sure to have a little pocket of money that you keep aside to use after closing.
Yep. So when someone says to me, I have $70,000 total, I don't take them to the penny, right? I'll be like, okay, on average, closing costs are 2% of the sales price. Let's go 5% down and, you know, kind of factor it that way to see how much money they could have left over to save some of that in reserve. So, and then after that, I'll just email you a link. It'll be co-branded with Sherry. It's probably will take 15-20 minutes, a secure account that you set up and you answer your questions. Based on your answers, it'll create like a needs list of documents that you'll upload into that account. And then it notifies me as soon as you're done. So I'll have access to your information, to your documents, everything done securely. From the time I get that, it literally will take me just a few hours to work up the numbers, run desktop underwriting, come up with different loan program options. And I put together a spreadsheet so you can see like a side-by-side comparison. And then the next step is sending that to the client and then having a conversation with them and going over and saying, hey, you know, what is your maximum sales price that you feel comfortable with based on this worksheet? And then I'll provide that to you as the agent.
What does it look like once the application's done? You know, with the bigger banks and some online banks, usually you talk to one person until you get the application done, and then you move to another person, another person, another person. How does that look like with you? Are you the one point of contact through the whole thing?
Yeah, it's me as the loan officer. And then we have really, really experienced processors. So generally what will happen is once the processor takes on the file with me, meaning that you're in contract on a purchase or on a refinance, your rate is locked in, right? I'll always work with you on the pricing. She'll then take it and submit it to underwriting and find out approval items. And generally we'll work with my buyers also as part of my team to get that going as quickly as possible. But I am your main point of contact to the real estate agent, to the client, but you will see a team of people that also will work on the file with me.
Right, but if we have a question at any time, it's just one person, right?
It's me. It's Tracie.
That makes it so much easier, so much easier.
Text, it's yeah, I don't believe, I mean, I'm client facing in the beginning and throughout the process. And, you know, I always say clients for life, and I develop that relationship with people. And, you know, and our business is built on referrals, you know, like, so we have to do a really amazing job for people to want to refer us business. So I make sure that I'm responsible for that. Absolutely.
Yeah. Well, we all want to provide the best service we possibly can, right?
Absolutely. So Sherry, what's the best way for people to get in touch with you?
Oh, with me, my cell phone is the easiest. It's 979-492-0101. Text, call, email Sherry at Selva Sherry. And my name is spelled Sherri.
Awesome. And I always tell people, just Google me. It's Tracie with an IE. So Tracie Schmidt, you can Google the Schmidt team, and you'll find me everywhere. So I'll be on like Instagram or Facebook or YouTube or website or whatever whatever you want.
That's a good point. You can Google me too and find me in a bunch of places. I need to start saying that.
Yeah, because your name isn't very common, so I feel like you'd pop up on Google pretty quickly.
Yeah.
That's so awesome. Well, it was such a pleasure talking to you. Is there any last questions that you have, or?
Well, I think right now we've covered a whole bunch. I want to let people digest this a little bit. Maybe we can come back and do another call about some specific questions. If you guys have questions, put them in the post below or text them to me so that Tracie and I can work on giving you answers to the questions that you have. That's what we want to serve you in the best way possible. And that's
Absolutely.
Knowing what you want is how we do that.
Yeah. And the next call, I think we're going to make all about Texas. So I'm going to get some of that information and we'll really dial into your state and some nuances in that.
Awesome. Well, thanks so much for coming by today and talking. This has been really informative. I appreciate you, honey.
Awesome, Sherry. Talk to you soon.
Okay,
Bye.
Bye.
Bye.